Time for Top That Trade. Our players are ready to go. Phil Flynn, a Fox Business Network News contributor, and Alan Nuckman, the chief market strategist at BullseyeOption.com. Round number one, too fast and furious. Rate cuts are coming in the spirit of Groundhog Day. Will you shadow what history says about rate cuts and market action?
Well, history is only history. In my mind, I just follow what the markets are telling us, and they've been perfectly projecting what the Fed's going to do in a soft landing. That has happened. Now, we're going to have cuts coming, and here this week we saw a bit of a pause in the markets, a profit-taking pause that we needed after that run-up. We had 8 out of 10 sessions of new all-time highs in the S&P, but so far Powell has played this perfectly, and there's a 100% chance, nearly 100% chance, that in May there's a cut, and there's a 40% chance of that being a half a point cut.
I know that if Jerome Powell sees his shadow, we're 6 months away from the first rate cut. That's the rule, I think. So if he doesn't see his shadow, it could come in 5 months, right? And that's what the Fed Fund futures are saying right now. And in the Fed Fund futures, of course, we're hopeful it would come sooner rather than later. But after Jerome Powell saw his shadow, it's like, no, we're changing it. So they pushed it back a little bit. But I think at the end of the day, listen, rate cuts more than likely are coming. The biggest bugaboo, of course, is inflation, right? And right now, inflation's been rather tepid right now. But the Fed did see some signs that concern them. And if the inflation numbers go back up, they might have to kick that back a little bit further.
Look at the 10-year yield. Now, that's what's by the market, supply and demand. And that's now trying to test those recent lows that traded 2 months sideways. If it goes below 75, that projects a breakdown down to 3.25. That's a very, very healthy sign.
It is.
Round two, keep digging. Uranium and gold have rocketed up, but miners are still digging out. What metal would you buy for the biggest pay dirt?
I think you have to start buying the miners, and it's the same in uranium. It's the same thing in energy. These stocks are undervalued based on the price of where the commodity is. And a lot of it is uncertainty about energy policy, right? We want green energy, but we don't want to use nuclear power, things like that. So right now, though, I think the reality is setting in. If you're ever going to get to net zero, nuclear is going to be part of the equation. We like the energy sectors. We like the ETFs. We like Cameco, which I think is going to be a good uranium stock. I think these things are poised to take off. They're going to be red hot.
Those stocks have already made amazing runs, the uranium stocks. I'm looking at golds at the halfway point of this recent action that we've seen after that high and this pullback holding the 2000 levels. So I'm liking gold. And if you look at GDX, the gold miners index, it's 40% off its 2020 high. It's been trading between 25 and 35 for 1 year. A breakout of that range targets 45. And guess what the old high was? So there's a lot of upside with gold that close to all-time highs, but the miners are not. So that's very attractive in my opinion.
Round three, competition crushed. 10 giant corporations control most of the consumer products we buy. Among them, Kraft, Coca-Cola, Kellogg's. What's your power play?
Well, public companies have pricing. They've been pricing power profiteers. So they've used this to make more money. So the profit has increased from about 20% to now about 50%. So they've been able to make more money no matter what happens with the cost. So I believe in all of those stocks. And I believe that essentially all consumer goods stocks, and even somebody like a Google, they've got pricing power on their software and anything that they do as well. So everybody has pricing power, and that's very much a positive for stocks. We may not like it personally, but we've got to remember this is positive for stocks.
I think at the end of the day, when you look at the pricing powers, sometimes those numbers don't add up. You have to look at tax considerations, which are changing. You have to look at the cost of transportation. So not all those costs are in there, but there's no doubt they've had pricing powers, and they would be not doing a service to their shareholders if they didn't take advantage of it. But at the end of the day, try to pick one of those old stalwarts. They're all good. You can almost not go wrong because they have their own type of monopoly. But the one that I'm going to pick is where you can buy all that stuff, and that's at Costco. This is a stock that makes record high, and I don't think it's going to stop. I think this thing's going to keep going. This is like the internet stock of consumer staples. Go with Costco.
So the truth is there used to be 8,000 publicly traded companies. There's only 4,000 now. There's been consolidation in corporate America. That means greater profits. That's the game we play. You don't have to like it, but that means stocks are going to make more money.
In your bonus one question for today, Punxsutawney Phil has delivered a correct forecast about winter approximately how much of the time? 100%, 50, or 39% since 1887?
100%. He's never been wrong, ever.
I say 30%.
Alan, you are closest to the pin. Great job to our Phil as well. Business First Dan will be right back.
This is anti-groundhog propaganda. He's never wrong.
I'm going to burrow and I'll pull you out and you tell me what Apple's going to do.
All right, that sounds like fun. We could try that.